Okay, let's go over the markets. So we see that clearly this on the daily went down, up, had this big wick here on the ES, so not a good sign. And these pullbacks, I mean, this is as bad as it gets. You have 1 bar pullbacks here, makes one reversal, and I mean it's just pretty bad. The question is it going to break down these levels? You know, this is pretty bad. I mean, the buying, one green bar, 2 green bars, but really it's 1 green bar. This is like a little lower high, lower low, lower close. So this is pretty bad. Anyway, market over here. You have breakdown, last breakdown here, tested, had a move, then went into upthrust position to test this high volume area. You see this has the most volume in 78 bricks. It tested and fell. And this brick has more volume than 7 bricks. And it's right on the level, this area. If it wants to bounce, this is the area to do it. So we'll see if it bounces or not, but it's similar to the concept of a demand zone. This is the origin of this rally, so it taps it, and we'll see what it does. I had a count of it going from 1, 2, 3, 4, 5 up to around here. It went higher to this higher level of this resistance area, and it went here, and then I just started pulling back. So we'll see if it bases out here for another run. So nothing really more to be said. It just reversed. I identified it here, tested, banked, went a little bit higher. Here you have some selling on 27 times 10,000 contracts. Coming back to the support level, not a good sign. This 67 is bigger than 21, 47, 41, 38, 24, 37, 18. It's this volume here is bigger than the volume on all of the others columns. So not a good sign. It is selling right here. But we'll see if it holds, and then it has at least a bounce. And there was a little minor accumulation to set up the pullback to test these areas. That's about it. There was one, the move in the morning. There was some shortening of the thrust here, but sellers were not able to capitalize. You know, over here, there was some weakness. And I guess it's way too early in the morning, no liquidity. Then finally, it's still early over here. Selling came in, more selling, up thrust, test, tap, tap. Here, there was a little trade, just take out this liquidity. And it was because of this. You see how the volume shrinks? It's just not there. So what happened here, this little accumulation area, maybe they were covering, I don't know, but there was some buying going on here. Because the sellers couldn't press. How you know? I knew right here, because you had this bar, and then you 1, 2, 3, 4, 5 bars, they couldn't take out the low. And instead you had a reversal, and then this wick went down, up. So that set up the bounce to take out the stops above this area right here. And from there, selling came. So this was it wasn't that great of a move, and this was not capturable. But I'll show you what was capturable. So what you see here, you're doing. Right? What I explained was that it was not possible to catch the turn. And I'm going to go into a lesson on this. So don't worry about it. This was too early in the morning, right? And then it broke. You can't get the pullback here, obviously. Right? But these pullbacks, continuation trades, they're doable. Right here. This was your break and a test and a break and a test. Where was the test? Oh yeah, this was the test. This was the break. This was a test. This was a lower low. And then it started basing out. What did I do? And I knew there was some accumulation or whatever. Then that just set up the test back here, which was sold again. Now, I don't know if it's going to go down anymore. I don't want to play that game. But the point is, and this is going to go into my lesson, so give me 1 second. All right, so I'm going to just go over two, I hate calling them setups, but I don't know how else to describe them. But two opportunities, I guess that's the way to do it. But before I do that, you have to understand that in the Wyckoff approach, any discipline, right, you basically become an expert at something. Any discipline in the world. If you're a mechanic, you get expertise in a car. If you're maybe a programmer, you have expertise in a particular language. If you're a writer, you have expertise in literature. If you're a ball player, you have expertise in basketball, right? So as a trader, especially as a Wyckoff trader, you have expertise in trend. That's the thing that you have expertise in. A Wyckoff trader, what does he know? What does he really, really know? Just like a doctor or what is it, ENT knows the ear, knows throat, or a cardiologist knows the heart, or maybe a lawyer knows a lawyer, whatever, the law, or a special set, like a Wyckoff trader, in my opinion, is expert at this. All right, now that I've established that, the second thing is, there are two natural things within trend in terms of opportunities or setups or basically trading opportunities. The first is the start of a trend, so which is the end of the prior trend, right? So you have expertise in you have expertise and know how to trade and get in, either here or there, wherever, right? So this is called the turning point trade. Pay attention, folks. This is the turning point trade. And basically, it's getting in at the start of a new trend. Doesn't matter what time frame. The point is, you know how to execute a trade to get in at the start of a trend, typically at the springboard. All right? It doesn't have to be at the exact low, obviously, but you have to, you have expertise. There's a turning point trade, and you get in the start of the trend. Now, obviously, there are very few of these, right? Because the start of the trend means that you only have opportunity here, somewhere here, or somewhere around here. So there's very few of these because you get them at the start of the trend. You're not going to get the next one until the trend changes. Right? So you won't get another one until probably around here. But there are lots of trading opportunities trend continuation opportunities. There are a lot of trend continuation opportunities. So how do you know how to trade the trend continuation opportunity and the trend turning point trade? All right, so these are the only two setups you really need. You don't need anything else. And these are the only two logical setups. Either it's a new trend or trend continuation. That's all there is. It's a new trend or trend continuation. There's nothing else. If you're trading trend, you're either trying to get in on the reversal onto a new trend or getting in on trend continuation. So most folks, what they will do is I don't know who came up with this, but this 50% back, you ever heard of that? 50, what is this bullshit? 50% back, halfway back entry. I don't recommend this, but this especially, but anyway, this is the 50%. They use this or 68 or Fibonacci based 68%, or they'll try to get in a moving average, reversion to the mean trade and get in once it goes below the 20 and then above the 20 and all that stuff, right? So this is, or they'll use some VWAP or I don't know what else, or the other one was a test of this and that, on the ice, and the creeks, whatever. I get it. All right, so there are many different ways to do it, but I'm going to show you that something else. At these areas when the market pulls back, many times you will get a reaccumulation. Reaccumulation. There's reaccumulation here. There's reaccumulation. Where's this? There's reaccumulation here. There's reaccumulation here. And I'm going to show you practical, real examples. All right? And here you have redistribution. You have redistribution. Then you have more redistribution. So these are the redistribution trades, 1, 2, and 3. Then the turning point trade right here. Maybe not here, but here definitely, like around here. So you have redistribution trade, and bang, you have your change of behavior, climactic, blah, 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 turning point trade, setups. Then you have the reaccumulation, all of that, right? And then you have your turning point trade here. And then you have your, oh shit, I used the wrong color. One sec, the turning point. And then you have your redistribution trade here, okay? So you can enter on an existing trend. A turning point trade is the start of a new trend. So that's one type of trade. It's too much colors, right? The other one is the reaccumulation or redistribution trade. This is continuation. All right. Now, of course, over here they're also going to be looking for springs and upthrusts, and I get it. These are behaviors that occur all the time. Okay, but what I'm saying is I'm showing you the turning point trade and the reaccumulation redistribution trade. All right. So let's go. I've already explained this before, but basically the elements of this that you have to become an expert at. One second. Is the change of behavior. Oh, wait. The left-hand side, we typically has climaxes, SOT, right hand side of the turning point has the change of behavior and your lack of supply or demand. These are the basics, all right? So then you have the reaccumulation, which is a continuation trade. So over here, you need reaccumulation and redistribution. These are the elements: reaccum, redist, plus a break. All right. What I'm going to show is the redistribution trades, because not every time you're going to get the turning point, and then you don't want to wait all day or whatever time frame you're on for another turning point. It may come, it may not come during the day. So, but there are other reaccumulation, redistribution trades that will occur on pullbacks. Yes, their reward is much less because you're not catching the entire trend, but they're good. They're good and good profits. So these are the only two real trades that make sense to me, because that's what you have in a trend. You have a turn that starts the trend, then you have continuation within the trend. Then you have a turn, start downtrend, then you have continuation. All right, so anyway, I'm going to show the redistribution trades. All right, so I already explained that you cannot catch this move in the morning at, whatever time. It didn't pull back, whatever. All right, it didn't pull back, didn't give you the juice. Now it already went down. It's not testing up here. So what can you do? What can you do to trade this damn thing? Right? Answer is you look for continuation trades. Now, people have very different ways of doing continuation trades. Some will use some moving average. Some will use upthrust. Some will use VWAP. Lots of stuff. What I'm going to show is the reaccumulation, redistribution, because to me, that's the key. Why? Because redistribution is the precursor to continued markdown, not the 9 moving average, not the VWAP. The cycle, whether it's on a big time frame or a little time frame, is accumulation markup, distribution markdown. So when it's in markdown, it goes through the same cycles, but redistribution and then continued markdown. So what in your mind, you have to identify redistribution in order to get the continued markdown. I hope that makes sense. All right, so we're here. What are you going to look for? Redistribution. Where is it? All right, now this is what you need. This chart, which is what Wyckoff used, and it's in his course. This is what that is for. Okay, now can you use the other? I mean, you could, but I prefer to use, this. So basically what happens is you have this, and you have this basing structure. Here, what's going on is redistribution followed by a break. How you see this here, right there. There's some redistribution here, 26,000 contracts. Goes down, comes back up, and then back down. When it breaks, you always have an increase in volume. Yeah, not always, but generally. Right there, 22,000 contracts. So it redistributed, continued into markdown, where we see the base of redistribution and then the break. So it's a base break, gives you the test where they're selling up here. That's why the volume expanded. On the test here, setting up the next redistribution, You know it because this base building, right? Because they're distributing within a range. So that's why it builds bases. And then the break. Now what happens? Expansion on the print, as indicated by the white boxes. So this was redistribution break. Now gives you another test all the way back here, giving you another beautiful test, which makes the lower low, right? So you see here, redistribution, continued markdown or break, redistribution, continued break, until it breaks to the upside, which gives a pullback, which makes the higher high, testing the same area from where you have continued selling. All right, so the trades are basically just the base break or redistribution break, retest, entry, base break, retest, entry, boom. Right, because your edge here is not a pattern, or like, oh, you know, this candle looks like this and that candle looks like, no, it's what it is redistribution is your edge. The distribution itself is your edge. So you need to see it, confirm it, enter, see it, it's confirmed. How do you confirm it? The big red bar. So I want in where smart money was in. And you get that because of the tests that are going into that same area, offering you the opportunity. All right, so it's not based on any pattern. It's not based on this bar look like that and this reverts here. It's based on redistribution. So this is the lesson. Basically, when you're looking at trend and you develop like a real deep expertise of trend, which you as a Wyckoff trader should have, you understand its accumulation, markup, distribution, markdown. You understand that it is an imbalance in supply and demand, and how to read that imbalance by way of three things. Supply, demand is by three things: price, volume, and time. Those three key factors, and those three key factors, from that we see certain behaviors. From those three key factors of price, volume, time emanate behaviors like the climax, like the change of behavior, like a lack of supply or a lack of demand, like a shortening of the thrust, right? So those behaviors are just manifestations of supply and demand and their elements of price, volume, and time, where you have expansions in volume or contractions in volume or very little spread, etc., etc. And from that, as you understand trends, you'll understand that these are the opportunities that present themselves. One is when a trend turns, and the other is just continuation trades. All right, I don't really have anything else. So basically, you want to be an expert. I don't know how else to go about this, but you have to, just like in any profession, you have to understand, you know, what creates trend, what continues trend, so you can trade it. All right, that's all, folks. Take care. Bye.